Hello all. Welcome to School for Becoming Smart Investor. You might have heard a very famous saying, long-term investing in equity is the surest way to healthy wealth creation. But at the same time, there is another well-known fact that about 90% of people lose money in stock market, especially an average retail investor. Investing in stock market is simple, but it is not that easy to earn handsome profit from it. Many new investors have found that soon after buying their first stock, its value dropped by half. But why does this happen? Because an average investor does little or simply no research about the company in which he is or she is investing her hard earned money. Investing decisions of such investors are often based on tips they hear from a friend, colleague, or from a financial magazine that they just read. Consequently, such investors buy and sell shares without adequate information about companies in which they are investing money and hence later lose money in most of the occasions. This happens because such investors are not aware on how to analyze company to find its true value to decide whether to invest in it or not. There are several examples of multi-bagger stocks which have given 500% to 1000% and some even 10,000% returns to the investors in period of 5 to 10 years or more. But at the same time, there are several examples of wealth destroyer stocks which have fallen by around 85 to 95% in its value. Hence, it is very clear that stock picking is not easy. Therefore, my friends, you're on a right place for school for becoming a smart investor. So, my dear friends, picking up a stock needs a proper evaluation and systematic approach to select right stocks at right price and at the right time. This is where the fundamental analysis comes into the picture. Now let us try to understand what is fundamental analysis. It is a method for evaluating intrinsic value of a stock or a security to find long-term investing opportunities. This is done by examining related economic, financial, and other qualitative and quantitative factors. In this course, you learn about the basics of fundamental analysis of shares so that you can become a smart investor and you can invest your hard-earned money into a proper with a company or shares with having a value good prospects for growth in future. So let's begin the journey. My dear friends, fundamental analysis helps to determine the financial health and performance of a company and also helps to understand the business from various perspectives, and hence it is always recommended to do a proper fundamental analysis of the stock before investing in it for the medium to long term, say for about 3 to 5 years or even more. Fundamentally, it is believed that market price of a stock tends to move towards its intrinsic value or the real value. A fundamental analyst or a long-term value investors often calculate intrinsic value of a company before investing in them. If the intrinsic value of a stock is above the current market price, then they would purchase the stock because they know that stock price would rise in future and move towards their intrinsic or real value. Similarly, if the intrinsic value of a stock is below the current market price, then they would sell the stock because they know that stock price would fall in future and move towards their intrinsic or real value. Such investors keep themselves away from the short-term fluctuations in stock prices and rather concentrate on the underlying business performance of the company. Over the long term, the stock price of a fundamentally strong company tend to appreciate, thereby creating wealth for its investors. My dear friends, there is another kind of analysis known as technical analysis. Technical analysis is an art of examining past price of the movement of a stock to forecast future price movements. It helps to identify trading opportunities by analyzing statistical trends gathered from trading activity such as price movement and volume. Unlike fundamental analysis, in technical analysis, it does not matter whether a stock is undervalued or overvalued. In fact, the only thing that matters is the past trading data of a stock and what information this provides about the future movement in the stock price, whether the stock is overbought or oversold, and whether the price will go up or down. Technical analysts believe that everything from company's fundamentals to the broad market factors and the market psychology are already priced into the stock. Technical analysis is good to find the entry and exit time in a stock for intraday or short term, as it mainly analyzes investors' current and past behaviors towards a stock. However, if you want to find a multi-bagger stock to invest from long-term point of view, then fundamental analysis is the best tool that you can utilize. So guys, that's all for today's videos. Let's meet in our next class.